Bloomberg Audio Studios. Podcasts, radio, news.
This is the closing bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlet Fu.
All right, well, let's take a look at some gainers. Nvidia shares finishing the day higher by 4%. The company said it received assurances from the Trump administration that sales of its H20 AI chip to China would be approved. This is a dramatic reversal by the White House. This move coming late yesterday, crossing on Nvidia's blog. Late yesterday, U.S. government officials told Nvidia they would greenlight export licenses for that H20 AI accelerator. This, according to the company late yesterday. Shares moving higher by about 4% today. We also saw a move higher from AMD as well. Also, let's talk Citigroup. Look at this. Shares rising to the highest level going all the way back to 2008. A 3.6% higher on the day, 3.7% higher on the day. The bank said it would ramp up stock buybacks following a strong result in regulatory stress tests. Citigroup's traders also rode the tariff-induced volatility in markets to their best second quarter in 5 years. Revenue buoyed by record trading volumes in the quarter. Once again, Citi shares higher by 3.7%. And MP Materials shares surged today. You guys might remember we had the company's CEO, Jim Litinsky, on our air just late last week. Shares surging today by close to 20%, the highest intraday level going back to April 5th. Apple committed $500 million to buying the company's American-made rare earth magnets in a multi-year deal. Apple and MP Materials will establish rare earth recycling line in Mountain Pass, California, and develop a novel magnet materials and processing technology to enhance magnet performers. Yeah. It's part of Apple's pledge to spend more than $500 billion in the U.S. over the next 4 years. Shares of MP Materials higher by 20% today.
All right, let's get to some of the decliners. Wells Fargo was among the worst performing S&P 500 companies today. Fell about 5% to finish the day. After a miss on second quarter net interest income, it also lowered its full year guidance for NII after another quarter of tepid growth. So interesting here to see that divergence in the bank earnings right now.
All right, I just want to jump in because we did get earnings from Omnicom. It's not just the big banks that are reporting. This is the advertising agency. The company reporting second quarter revenue that met analyst estimates, $4.02 billion, just slightly above the consensus estimate of just under $4 billion. Second quarter adjusted EPS of $2.05. That does beat the consensus estimate of $1.98. The stock moving slightly higher in the after-hours trade by 2%.
All right, and back on those decliners, BlackRock, after hitting a record high here on Monday, is now down 5%. It closed the day down about 5%. And it was headed for its worst earnings day drop in more than a decade after revenue and performance fees missed estimates in the latest earnings report. BlackRock, of course, is the world's largest asset manager, and total assets actually did hit a record $12.5 trillion as the company continues to grow into private markets. It grows its ETF business, particularly that crypto ETF lineup, really powering some of BlackRock's growth here. And yet traders just wasn't enough here to quell traders' concerns about that revenue miss, that stock falling. And then finally, Newmont dropping today following the resignation of the company's chief financial officer. This is one of the world's top gold producers, falling about 5.7% to finish the day. And they announced yesterday after the close, Carolyn Ovalman tendered her resignation last week, and the company didn't disclose a reason for that departure.
All right, let's take a quick look at yields. We did see a lot of activity there, a meaningful move higher, particularly on the longer end of the curve, something that's been playing out now for the last few weeks. Your 30-year yield now pinned at that 5% mark. And you're also seeing the 20-year yield also camped out there as well, further steepening along the curve with your 10-year yield, flirting with 4.5%, and your 2-year flirting with almost 4%. And of course, all of this tied, of course, to a repricing of expectations around the Fed after that big CPI report this morning that seemed to suggest, at least for right now, no rate cuts, at least not to the largest extent that was priced into this market, are coming.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.